So I recently stumbled on an ad on Facebook soliciting the sale of luxury watches as investments. Basically, it said that Rolex watches have gone up 35% in the last 12 months. They're implying that this is a better investment than a lot of things you can do with your money.
Imagine walking into a room filled with watches so rare, so exquisite, that each tick of the second hand feels like a heartbeat of history itself. Now, picture that with every glance at these timepieces, your money isn't just sitting there, it's growing, quietly, invisibly, but exponentially. Today, we're diving deep into a world most people never see, a world where a single watch can change not just your wrist, but your financial future. This is how smart investors buy rare watches and instantly unlock capital growth. You've probably heard about stocks, real estate, or cryptocurrency as ways to make money. But the truly savvy investors, those who quietly build wealth while the world chases the next trendy stock, know the hidden power of tangible luxury. Among these, rare watches stand out as a secret weapon. They're not just jewelry or status symbols. They're assets, they're investments, and when approached correctly, they can deliver astonishing returns. But here's the catch. This isn't about buying a watch because it looks cool. This isn't about following trends or Instagram hype. This is about strategy, knowledge, and timing. The kind of moves that turn a six-figure purchase into a portfolio that grows silently and steadily. Understanding the market. To understand why rare watches can deliver capital growth, we first need to understand scarcity. Think of it like this. Unlike mass-produced goods, rare watches are limited. Some are one of a kind. Some are part of a limited batch, created for a specific year, a special occasion, or a private collection. The moment a watch is no longer available through regular retail channels, demand explodes. Smart investors know this. They don't buy just any watch, they buy the watches that have historical significance, impeccable craftsmanship, or cultural relevance. Rolex, Patek Philippe, Audemars Piguet, these names aren't just brands. They're symbols of value retention. A rare Rolex, Daytona, or a Patek Philippe Nautilus isn't just a watch. It's a golden ticket into a market that appreciates over time, often outperforming stocks and traditional investments. But here's where many beginners go wrong. They chase trends. They buy watches because someone on social media said it's hot, or because it's worn by a celebrity. The truth is, these watches often lose value the moment the hype fades. True capital growth comes from strategy, research, and patience. Key principles smart investors follow. Rarity is everything. The first rule is simple. The rarer the watch, the more potential for growth. Limited editions, discontinued models, and watches with unique complications or features are the golden targets. These are watches that collectors obsess over, that auction houses compete for, and that increase in value precisely because supply is fixed. Condition matters. A watch in pristine condition isn't just aesthetically pleasing, it's an investment that can be resold for a premium. Original parts, untouched dials, and complete documentation exponentially increase a watch's value. Smart investors know the difference between a watch that's lightly worn and one that's heavily polished or altered. A small scratch can mean thousands of dollars lost, while keeping it original can unlock a future sale price that feels almost unfair in its profit potential. Provenance adds value. Where the watch comes from and who owned it can drastically affect its worth. Watches owned by celebrities, athletes, or historical figures often see value skyrocket. But even beyond celebrity ownership, the story behind a watch, why it was made, its journey through time creates a narrative that collectors pay for. Smart investors seek watches with a story, because stories sell in a way mere craftsmanship cannot. Timing is strategic. Unlike everyday shopping, rare watch investing is not about impulse. It's about market timing. Investors know that the best deals often appear during private sales, estate auctions, or auctions where less experienced buyers hesitate. They watch trends, track historical price growth, and know the right moment to buy or sell. The difference between buying too early and too late can be the difference between doubling your investment and breaking even. Unlocking instant capital growth. Now, you might be wondering, how can a watch bought today unlock capital growth instantly? The answer lies in perception and liquidity. Once you buy a rare watch, its value doesn't stay dormant. You can immediately place it in a private market, a boutique auction, or even a trusted collector's network. With rare watches, liquidity isn't slow like real estate. In many cases, if the watch is desirable, it can be sold or leveraged within weeks or even days. For example, imagine purchasing a limited edition Rolex at retail. Within months, as collectors and investors realize its rarity and chase after it, the market price rises. If you decide to sell, You're not just selling a watch, you're selling scarcity, history, and desirability. Buyers are willing to pay a premium for immediacy and authenticity. What you initially spent suddenly turns into a significantly higher return, sometimes doubling or tripling in a short span. The auction's advantage. Auction houses are a treasure trove for smart investors. The thrill of an auction isn't just for entertainment, it's a financial strategy. Rare watches sold at auction often exceed their estimated value because bidding brings out competitive instincts, especially when multiple collectors desire the same piece. Smart investors leverage this knowledge, sometimes buying watches at auction below potential market demand, then reselling them in private networks for a tidy profit. One critical insight is that auctions reveal market sentiment. A watch that exceeds its expected price at auction signals rising demand. This insight allows investors to make informed decisions, either holding similar pieces for future growth or strategically selling at peak interest. Private sales and collector networks. Beyond auctions, private sales are the secret playground of wealth accumulation. Rare watches often circulate quietly among collectors, investment groups, and boutique dealers. Smart investors tap into these networks to access pieces not available to the general public. This insider approach is where you see instant capital growth, because buying a highly sought-after watch before it enters wider visibility creates a natural appreciation almost overnight. Unlike mainstream investing, rare watch investing is about relationships. Knowing the right dealer, understanding collector psychology, and building trust in private circles gives you an edge. You're not competing with the masses, you're strategically positioning yourself to acquire and sell before the market fully reacts. Diversification within watches. Even in rare watch investing, diversification matters. Smart investors don't place all their capital in a single brand or model. They spread their investments across iconic models, limited editions, and watches with unique complications. Some may be focused on vintage pieces, others on modern limited releases. This approach balances risk while maximizing the potential for high returns. If one watch appreciates slowly, another might skyrocket, creating a steady growth curve across the portfolio. Understanding market drivers. A key reason rare watches outperform traditional investments is how their market operates. Unlike stocks, which can fluctuate wildly due to global events or corporate decisions, the rare watch market is driven by passion, scarcity, and emotion. People collect watches because they love them. That intrinsic demand insulates these assets from the same volatility seen in other markets. Additionally, watches are portable wealth. Unlike real estate or art, you can carry a six-figure asset in a small box. This makes them highly attractive for investors who want liquidity, discretion, and security. It's not just money, it's money you can wear, admire, and strategically trade. Mistakes to avoid. Even with immense potential, the rare watch market has pitfalls. Buying based on hype alone is a quick path to disappointment. Not verifying authenticity or provenance can lead to costly mistakes. Overpaying in a frenzy without understanding long-term demand can turn what seems like instant growth into a stagnant asset. Smart investors mitigate risk by researching obsessively, seeking expert authentication, and thinking several steps ahead. Another common error is ignoring fees. Auctions, dealers, insurance, and maintenance all have costs. While these are often minor compared to potential returns, neglecting them can erode profits. Smart investors account for every expense, ensuring their growth is real, not just theoretical. The emotional element. There's another layer to rare watch investing that can't be quantified but is essential: emotion. The people who drive the market are collectors with passion. Smart investors understand that they aren't just buying metal and gears, they're buying desire. By aligning their acquisitions with what collectors truly want, investors tap into a market fueled by enthusiasm, prestige, and the human love for legacy. The compounding effect. Over time, rare watches don't just grow, they compound. A smart investor who builds a collection carefully over years can see exponential returns. Watches purchased at strategic moments gain value, and as the collection grows, the overall capital grows as well. Selling one high-demand piece can fund another acquisition, creating a self-sustaining cycle of investment, growth, and reinvestment. Unlike conventional investments, where growth is tied to external forces, watches grow because humans attach value to them. Scarcity, desirability, and craftsmanship create a self-reinforcing market. The more you understand it, the more you can predict which pieces will appreciate next. Rare watch investing is not about trends. It's not about vanity. It's about understanding scarcity, history, and human desire. It's about patience, strategy, and knowledge. For those willing to learn the market, build relationships, and make informed decisions, rare watches offer a unique form of instant and long-term capital growth. Imagine holding a watch that wasn't just a symbol of status but a symbol of smart financial decision-making. A watch that appreciates quietly while the world chases more volatile, unpredictable investments. A watch that transforms every second it ticks into wealth. That is the power of rare watch investing, the ability to turn elegance into growth, precision into profit, and passion into a portfolio that thrives silently but relentlessly. So, the next time you see a rare watch behind a glass case, remember, it's more than a timekeeper. It's a gateway to financial mastery, an asset that moves faster than most people realize. Smart investors know this. They see beyond the dial, beyond the bracelet, beyond the face of the watch itself. They see capital, growth, and opportunity ticking away in every second, and they act.